ready to take your investment game to the next level? Introducing Digital Investor, your ultimate guide to mastering the digital marketplace. Whether you're a seasoned pro or just starting out, Digital Investor brings you cutting-edge game theoretical strategies, expert insights, and real-time tips and tactics to analyze, evaluate, invest and grow your wealth. Don't miss out on the digital revolution. Visit www.nickblacknex.com and start your journey with Digital Investor today.
Well, that one is intense in the very beginning, isn't it? Blah, blah, blah. Like, whoa, guy, calm down, bro. Damn. Okay, let's see. Experimenting with 2x daily, sell at the end of the day. Stop. 2x daily. What? Like, are you talking about the ETF? I need more data, man. I need more data. I know it does sound money mappy, doesn't it? James, why always capitalized? Are you just always, James is always screaming. Ah. So what are you trying to do with it? Are you trying to sell options against it? Or what are you trying to do? Just simply own it into a bull market and then just pay the fees or whatever? I don't know, man. I don't know if that's the way to do it. I wouldn't be on a 2x anything unless I'm selling options against it. Okay, well, fair play. The man's yelling. Why not? Why not? Do I think Alexander Karelin would have done good? How do I think he would have done in MMA? I'm not sure. I mean, he was a beast. He was the scariest wrestler. He's the only wrestler. I don't know if you guys know much about Karelin, but this guy was so dangerous that with the big guys, if he got you in a head and arm drag and he was going to take you over his body, like basically dump you, dudes would tap out. They would tap out in wrestling at the Olympic level. They would tap out because they were like, if he slams me, he's going to break all my stuff, get broken. Just all the ribs, all my everything gets broken. It's daily, so you have to sell daily. Man, the thing I would worry about that is it's a lot of speculation. It's leverage speculation. I mean, your tax implications are pretty intense. It's 30%. So it's like you really have to win massive to win it all. And then if you hit a streak of 3 or 4 days, like last week, if this was last week, you'd get mutilated. I don't know, man. That seems, if it's working for you, cool. It just seems risky. Bruce Lee would have gotten destroyed. And the only reason I say that is not to make anybody mad. And you Bruce Leers out there, but so me and my buddy used to work. We did stunts for Walker Texas Ranger, and then one of my really good friends, it was on the new Walker Texas Ranger. He's one of the kind of good guy, bad guys, whatever. Anyway, I know Chuck pretty well, and I know when Chuck first started. When CBS first started filming Walker Texas Ranger, I was really, really young. But towards the end of Walker Texas Ranger, I was doing stunts. Me and my buddy Shannon were doing stunts for them. So we got really good in with the stunt crew and with a lot of the original dudes that were just like around Chuck, his kind of crew. And Bruce Lee was really, really fast. he just didn't hit hard, man. He's a 130-pound dude, and 130 pounds is 130 pounds, and that's why they have weight classes. And Chuck was, a pretty fit 185, 190, and having 60 pounds. Like when they sparred, and Chuck hit him, it shoved him into another time zone. Like it wasn't. I know people are like, oh, because the movies and stuff. Oh, it was really tit for tat. No, it wasn't tit for tat. Anyway, it is what it is. So there you go. And there's other stories too of Bruce kind of trash talking stunt people, and having a little comeuppance. Not to defame the man, but credit where credit is due. All right. Let's see. You buy pre-market, sell at the end of the day, tight stop loss. IRA. Okay, IRA good. Well, yeah, if it's working, it's working, man. I am not a, yeah. That's a rough. It probably does work in a bull market. But again, you know what else works in a bull market? Selling puts and just chasing it and chasing it and chasing it. If you get put, immediately selling calls. Just chase it, take the money, chase it, take the money. We'll talk tomorrow. We closed out another trade today for the options. So we'll talk about that behind the wall tomorrow. So that would be 2 trades. We closed one Monday. We opened one Monday, closed it today. And that portfolio is, and remember, we're at the end of today is the 2-week mark. And we're at 5.654% for 2 weeks. Well, this is the thing you got to keep in your mind. So everybody, that when you're thinking about the options market as a seller, not a buyer is a speculator, and that's no different than buying any of these assets and hoping they go up. But when you're thinking of the options market, like be the casino. I did those videos, be the casino. When you own an asset, whether it's Apple shares, iBit, whatever you own, if you own, for every 100 shares you own, if it's a relatively liquid market, you're going to have options chains. Most assets will have options chains. And so you can sell other people the right, but not the obligation to buy your stuff. And so you go, okay, do I want to be a buyer or a seller? As a buyer of options, I'm speculating, I'm buying a thing, this options contract at a strike price, at a particular price, that every day it dwindles in value just based on time. There's time decay, right? Theta, money that goes away every day you own that option. So as an options buyer, you're buying time and hoping that volatility creates a lot of premium in there. So you hope a couple things. You hope that there's not too much volatility premium, but you hope there's enough volatility in the asset where it's likely to meet your strike price, right? So you're buying time with the contracts, depending on where you buy them and what price. That allows you to speculate on the market. 93% of all options contracts on both sides of the fence, 93% expire worthless. 93%. So let me ask you, if there was a 93% chance that if you cross the street, you will get hit by a truck, would you cross the street? Oh, it's all wound up. Got to get it unwound. Would you cross the street? Anyone? I would not. Look for a different way. It doesn't make sense. So, based on math, because we're math people, if you went into a casino and you knew 93% of the time you sat down at that table, you were going to lose, you wouldn't play because it's rigged. So the options market is rigged towards pure speculation and time decay. But if you have a 93% chance of winning, I mean, really, it's 100% chance of winning because you win something as an option seller. Seller of options. So you own your 100 XYZ shares. You sell, unless you're at one of these spot facilities where you can do Bitcoin and Ethereum just like this, which hopefully soon coming to America, but not right yet. Anyway, you own 100 shares. That is one contract. So let's get through. Everybody here, I want you to write in the chat. 100 shares equals one contract. And while you guys are answering that, while you guys are writing that, Chris, the reason why you buy crypto is because even though you have a 93% chance of winning, as an option seller, you're winning small percentages, and that's great. It's over and over and over small percentages. It's unlikely in the options market you're going to have a year where one of your where your combined plays equal 100x or a 10,000% return. I mean, you may never get that in the options market ever. But what you should think is, this isn't an all or nothing. This is something that you do in addition to your speculation. It's something that you do when the markets are trading sideways or flat and your speculative assets are not appreciating. What you do is, or you take dormant assets, and this is how you monetize them or make them a performing asset. Does that make sense? So you need both, but you have to realize that you have to decide how much of your portfolio you would be willing to use towards speculation. Buying these assets is speculation. We just don't have time decay. When you buy Bitcoin, when you buy Ethereum, when you buy any of this stuff, it's speculation with no time decay. Doesn't mean it won't go to zero, but it's speculation with no time decay. You buy an option, there's time decay on it. So if you sell an option, the money's most likely in your pocket. John asks, when you talk about 93% expire worthless, should you mention that it also depends on your delta or profitability of touch so that people get a better understanding? It's not just a straight, 90% of the money expires worthless unless you're, no, you know what the actual way to say it is? That's not correct. The correct way to say it is 93% changes hands from options buyers to options sellers. That's kind of the end of it. Out of every $100, $7 is made by options buyers. $93 is made by option sellers. I guess that's one way you could kind of jiggle it around in your brain. I don't want to overcomplicate things. Let's keep it simple. So if you own a thing, you can sell someone else the right to buy that thing at a higher price. And then you say, okay, so what portion of my portfolio makes sense to be doing this? Well, that just depends on you and your risk aversion. People that are extremely risk averse or that like the volatility of the crypto space, but really don't care about crypto. I had a couple of clients, one in particular, two, who they didn't even care about crypto. They just wanted something that would appreciate. And they were like, if you can beat inflation and Fed funds, let's do it. I was like, okay, fair play. And so, if you can beat a little paltry, even if you're looking out for like treasuries, like say you were doing short-term treasuries, rolling them over, say you were going a little bit deeper in the curve. It's pretty easy to beat 3 or 4%, right? It's pretty easy to beat that. So even if you're doing short-term treasuries and rolling them over, it's easy to beat Fed funds. It's easy to beat government debt kind of returns. So you say, what's the next one? Can you beat junk bond returns, 6 to 7%? Yes. Can you beat, look, you can take your money right now if you're okay being stuck in IBIT, let's just say as an example, if you're okay being stuck in IBIT, or you're okay just sitting on cash, either one of those two outcomes, you could take your money now, you could sell a year out, you could immediately bank 18, 19% this second, right now. I mean, like right now, this second, I could take $1 million. I can go sell June contracts. I'll show you. You could go sell contracts for next year. You could immediately bank. It was almost 20% at one point yesterday. Immediately. Now you tell me anywhere relatively safe where you can pocket on one trade 20% and there's no shenanigans involved. Now, thing is, then that money's locked up for a long time. So you can grab 20%, one deal, 1 year, you're out. Woo-woo, look at me. Or you can grind 1 or 2 or 3% a week. Just imagine 1% a week would be amazing. 1% a week would be 4% months. You don't, man, do you guys know the numbers? Do you know what 4% months beget? Let me pull up, bro. Let me pull up my little chart. So I did some math. Let's see if I can get this chart out of here. Let's see if it'll let me grab it. Oh, yeah. Okay, now let me find out where it went. Where'd you go? Where did you go? We're going to talk about this. And we're also going to talk about Standard Chartered and some other stuff. Where'd you go? I don't know where it went. Hold on. I got to find it. Give me a second. I'm moving windows around. Hold on. Moving windows around. This is a good chart. Where you at? Ugh, God dang it. Stop. No, I don't want your auto update. F you. Stop. Okay. Okay, so let's put this into perspective. I'm gonna show you what we're looking at. And we're gonna look at Douchebank here in a second too. Apparently they're joining everybody's joining the crypto party. You know how it is. Everybody panics in. They're all coming to the party. Let's go big on this. Okay, so here's what we're looking at. This was what something very simple. Okay, this is a return of 4%, and 2 times out of the year, I just plugged in January and June just as random, 2 random months. Once every 6 months, you do a 10% month because things work out. You say, well, I don't know how realistic that is. Well, we're 2 weeks in at the end of today, and we're at 5.6 something percent. So it's likely we're going to be between 8 and 10% by the end of this month. That'd be a 10% month. Every now and then you're going to have one of those. Money compounds so flipping fast, it will make your nose bleed. Let me give you a little bit of an example based on this, where this is a visual progression of if you, and again, I just used $1 million just as a whatever. If you had $1 million, you grew it over 60 months, you had a 10% return twice a year, and all the other months you had 4%, which is doable. This is reasonable. Okay, it's not pie in the sky. Okay, and so what you get is after 60 months. Here, I'm gonna put it on a little placard. Boop. Actually, we do have a Libera update. They just released a new video, which I put in the chat, by the way, in the Telegram chat, the new Libera video. Okay. After 60 months under this mixed return strategy, $1 million grows to $18.42 million. I mean, you have to have, be willing for 5 years to do this. But I mean, it's an 18x. Now, could you, by speculating and all this kind of stuff, do this in crypto? Sure. Have people done this in crypto? Yes. Will people continue to? Yes. But is it guaranteed? Absolutely not. No. So is this guaranteed? No, it's no guarantee that you're going to make these returns every month. The point is, it's very doable. These are very possible, very realistic gains. This isn't like stupid ass pie in the sky. If you look at that same performance for, let's see, that same performance at 36 months. Let me see. Oh, no, we just did that at 60 months. If we did it at, let's see, after 36 months, same pattern, 36 months, $1 million grows to 5.75 million. I do that because that's a short-term lease. Like when we lease the cars that we rent out, that's a short-term lease. And we have some cars that are over $500,000. So like, you start thinking about the money, you're like, dang, are those two Cullinans going to return $5 million? Well, again, minus the tax implications, so take a third off of that. But still, it depends. If it's in an IRA, then maybe then maybe there are no tax implications. To give you some other ideas, do you guys know what the return is? Let's say this will be fun. What do you think? What do you think is a return that you could manage? A consistent return per month. Do you think you could manage 5.9% per month? And again, that doesn't sound, it's not unreasonable. Yes. Is it unreasonable? No, it's not. It's not at all. And as long as you're not pilfering the fund, then you get the snowball effect of compounded interest. This is what so many people miss. They just don't miss how powerful compounded interest is. Time is on your side. That's why you want to be healthy. Get to the gym twice a day. If you're a compounded interest person, you better get to the gym a couple times a day. If you keep pushing this chart out, it ends up going straight up. Yeah. So if you could average 5.9% per day, okay? Let me get that math for you. Again, I use the starting point of $1 million, but you could just go 100,000 and you could take it back a decimal, right? Let me put this guy up here because this is a pretty cool one. This one, I'll show you both. So 5.9% per month. In 36 months, $1 million is in 36 months, $1 million has become 7.2 million. Why I say this is interesting is because this is pretty much what we did with one of my clients. It was right at a 7X and it was just over 3 years. And it was Bitcoin options, just calls and puts, wheeling back and forth. But we didn't carry it out further. But anyway, and at 60 months, 5.9% begets $23.69 million. Because math. So, I mean, it's, some portion of your portfolio, it makes sense. It makes sense to have it probably playing in the options game. Yeah, if you took a penny one day and then double it, yeah, it's the doubling effect. Well, this isn't the doubling effect, but eventually it gets there. What happens too is if you have a couple of good months in the beginning, it pushes you further along on the timeline. So let's say you have you're doing you're trying to average 4%. You're like, cool, 4%. I like this. I like what I'm seeing. Great. But you have a 10% month or an 8% month. You just got 2 months and 1 month. You're now 3 months into the future. See what I'm saying? So now your goals just got 3 months sooner for having a good month because you have more to compound. Compounded interest, bro. compounded interest be a monster. Anyway, okay, let's see. If you decide to do this, what do you mean if I decide to do it? I've been doing it. You mean if you decide to do it? How much time will you spend? I don't know how much time you will spend. I spend about 20 minutes a day just watching and seeing if it makes sense to jump into other stuff. I don't know. It's a part of it, Chris, is going to be how comfortable you are. You should be paper trading for a while. You should be, writing down trades on paper and seeing if they work and making sure that what you're writing and what you would be doing is actually happening. Some of you were saying that Thinkorswim has some software that you can use to play with options contracts. But essentially, the bare bones of it is you own 100 shares of a thing, you can sell a contract against that thing. You know what other things you can sell contracts against? Dollars. That's a thing too. So if you own enough dollars to get put to buy 100 of a thing, you can sell a cash secured put. The cash secures you being put into the asset. Does that make sense? So far, we haven't been put into IBIT. We've been chasing it and chasing it. And if it gets back up to 100K, 110, 100, whatever, goes to 200K this year, we'll be chasing it all year. But that money that we have in the options market, the currency units in there, it's no longer Bitcoin in your mind, and it's no longer speculation. This is wash, rinse, repeat, grind out income. Wash, rinse, repeat, grind out income. That's it. And I would imagine, Chris, is probably be, if you're just learning this, it's going to be more. You're educating yourself. If this is something you've done for years, there's some people in here that have been doing options for a long time. 5-10 minutes. Although you do find yourself keeping an eye on the underlying asset price, because if that thing moves around, then the options premiums really move around, especially the closer they are to the money. So, yeah, I mean, we did one, the one that closed yesterday. Well, it'll be, Brandon will put it in the chart and you guys will be able to see it. All the digital investors will be able to see it. But anyway, one closed yesterday. We reopened that same position when the price when it got higher again. This is on the put side. And then we resold to open and rebought to close. And right now we're just sitting and I'm looking at this kind of crazy market move around. Let's see, let's go over here. So yeah, the Bitcoin having a pretty good day. We're over 91. 91, yeah, we haven't been in the 90s in a while. And look, freaking Ethereum not S-ing the bed today. I don't know how long it's been since Ethereum has not sucked, but today Ethereum does not suck as much as other stuff. Look at Sui having a fine day. Filecoins, nothing there, nothing going on there. Jupiter, nice. JLP, oh, I got out a little early. I converted some JLP to cash today. Oh, I got a GMRT headline. Everybody was like, hey, they were going to do the rollout yesterday. So they're part of Dubai AI Week, as you all may know. And some of you should know. They're the Dubai, whatever council that's doing the big promotion and stuff told them they're going to start their big announcements either late today or tomorrow. And so they're just waiting for their official mainnet launch for when the Dubai AI Week kicks off and they start doing the promotion and the press about GMRT. So for those of you that were like, oh, GMRT hasn't run yet, the 21st came and went. I get it. I know they haven't rolled out yet. So they're waiting. All that happens this week. So that's something good to look forward to. All right, James, I have a question about USDC investment. Since it's fixed, how do you gain by selling it? What do you mean? Oh, no, you're missing the point. You're missing the point, James. USDC converted to USD, put in an options account, any of the trading facilities, wherever, I don't know, Interactive Brokers, Fidelity, Schwab, wherever is your broker of choice. I use E-Trade. That cash, you can sell cash secured puts against your cash. So like with IBIT, I haven't been buying and selling IBIT. I've been selling and then buying puts. On the other side, there's calls and there's puts. I've been selling puts against IBIT and just taking yield, taking profit. That's it. It's pretty simple. It's a little bit weird. It's weird in your mind because you're like, how am I selling against cash? But the idea is you're selling someone else the right to make you buy their shares is what you're doing. Anyway, yeah. Let's see. If this works so good, why don't you put a large amount in and make more money than you can spend? Randy, there's a lot of questions in that question. It depends on what your definition is of a lot. A lot can mean a lot to a lot of people. I have a not insignificant sum in there, and that is equal to the amount of money that I want to churn versus the amount of money that I want in my speculative assets. So everybody's going to have some risk aversion, some tolerance to pain, and some intolerance to pain and volatility. Yeah. So, and the answer to your question is, between me and my friends, we have a lot of money in the options market, but I'm not going to expand on that. But we also have a lot more money in the speculative crypto space, and a lot more money in the private equity space. Like right now, on paper, the digital private clients as a group, just their investments from the last year and couple of months since we started Digital Investor and Digital Private Client. Remember, we've only been going since two Augusts ago, not last August, but the August before. I think that was when we started. We're probably over 1.5 billion in total value that's been generated. And that's not even counting what we think may or may not happen with hypercycle. 1.5 billion. There's 63 of us, 63 people, 1.5 billion. We got money all over the place, bro. You got to do what makes the most sense. And that's going to be different for everybody. Like every single person is going to be different. How much do you want to churn? I'll tell you what, if someone came to me right now with $100 million and said, what should I do? I'd say, okay, let's see how much we can trade in the options market to that guaranteed return. Because there's a point where it's like you have so much that you can no longer get in and out of these contracts with the same ease. Like, I think if you had $100 million in an account, that might be about that might be the upper limit of about what you can slosh around really fast in the options market until those things become even more liquid. Well, you could do it on Deribit, but here in the United States, about 100 mil is probably it. But I mean, on Deribit, you could do 100 million a day. But that's straight options against Bitcoin and Ethereum using USDT as the kind of trade currency. They also settle those weird. You can have them Bitcoin settled. Like you can do Bitcoin puts and have them settle in Bitcoin instead of cash. It was really weird. So Deribit takes some. You got to wrap your mind around Deribit. It can be a little bit wacky. But anyway, yeah. And then how much you want to speculate with. So you might say, okay, out of my $100 million, I might speculate with 30 million of it. And then 70, and I put 70% to work in the options market, or something. You know what I mean? If you just wanted to be straight crypto and just get it for all it's worth. Yeah. So there's that. Okay. Let's cover some things. Okay. So we talked about GMRT. So I wouldn't be too stressful about GMRT. I think it's gonna have a good week. Hope would seem like it. Let's see. For those who already own IBIT shares, may you walk us through selling a covered call to take advantage of time decay? Yes. Matter of fact, why don't we just, while we're thinking about it, why don't we do it? Let's say you got to own 100 shares, right? So looking at what we are looking at right now this second, I own 100 shares of IBIT. Okay. And let's see, what's the underlying price? 51.70. Boy, this sucker's moving like a mother scratcher. I got out 4 cents too early. Anyway, so let's, well, you'd have to tell me a couple things. One, I don't know what your entry price is, but let's say you entered it today. Today, you bought it at 51.50. Well, you own 100 shares. So these are the strike prices. I would say go, at least at this rate, go out about 8 to 10%. Okay, so let's go to about 55 or 55.50, maybe even more, maybe even 56. It's just as an easy example. I own 100 shares. Okay, so I'm going to go to the 55.50 contract, and I'm going to take a look at it. So we have the last sale was at 15 cents. The bid ask spread is 14 to 16 cents. So you would sell your one contract. Let's see. Again, you had 100 shares. You could sell your one contract, okay, of 100 shares. That would get 100 times between 14 and 16 cents. So you'd probably put it at 15 cents right in the middle. So you would get $15. That would be $15 on your asset. And that would expire here in a few days. Okay. So that's not anything dramatic. You're like, man, I'm not going to make any money like that. Yeah, but that's because this is expiring way out of the money and several days into the future, not weeks. So if I want to go out a little bit, let's go to an expiration. Let's go out. Let's say we wanted to sell 1 quarter out. So let's go April, May, June. Let's go June. Let's take a look at what June's looking like. At that same 55, okay, the 55 or the $56 one, that's $3. So now on your 100 shares, you can click a button and bank $300, right? You're basically selling to open one contract at a strike price of $56 with the June 2025 expiration. You probably put it in the middle, 305 or whatever. But let's just say you get your $3 for it. So it's $3 per share. So that's $300, right? 3 times 100, $300. They credit your account, $300. They lock up your 100 shares. So that's locked until you either buy that contract back or it expires, in or out of the money. If at expiration, the price of IBIT is above 56, they're going to take your IBIT shares, they're going to keep them, and they're going to pay you $56 per share. So again, in this example, you bought them at 51, you just netted $5. You made 10% right there. And then you made your other 1.5%. You made this is 11.5% on this trade for 3 months. That's not terrible. If you get called out. Now that would be your maximum upside. Now, let's say that at expiration, the price was $55. Well, you sold the $56 strike price. That thing expired worthless because it didn't get to 56. Therefore, you give them nothing. They give you your shares back and you go sell another contract. You keep your premiums. You always keep your premiums. But hardly ever would you wait all the way until the end. Likely, as time decayed, tick, 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 you want to see what that would look like. So let's say the price was 56 at that point, right? It was at the money. So how do you want to look into the future? Easy. Pick the price you think it'll be and imagine that to be the right now price. So you sold, just imagine that we had sold this contract for $3. We go into the future. So just go back to today, okay? Or go back to the prices right now and look at what the current at the money is. So even if it was at 56 right now, that same contract is now, that was $3, is now $1.17. Does that make sense? So you still grabbed $2.87. Sorry, $2.83. You can buy the contract back for $1.20 and keep the spread. You don't have to get exercised. Does that also make sense? You very rarely are going to ride these things into execution one way or the other. You're just not. No point. So you look at this as a way to sell first, buy later. You know what I'm saying? And that's the way you take advantage of time decay. So even if the price does go up, so what? Right? So I like farming time. And I don't care if I don't track Bitcoin. People, everybody's going to come, not everybody. People come back and say in certain moments they'll say, "Oh, well, if you had held Bitcoin right now and you had grabbed all that percentage today, you would have kept that percentage." Like, okay, true. Like the price is up 3.7% today. I could have gotten 3.7% if I had been all in there and like all in IBIT and just sat there. Except that no one knows the future. I don't know what the future is. I have some, guesses. I have some gut feelings, but none of us know. But what we do know is, with just about 93% certainty, is that if we are a net seller of options, we are going to be gaining premiums as a general rule on a repeated basis. And why I like doing the weeklies, if you add up the weeklies, I mean, if you wanted to, let me show you another example. Just so as you know, in this example, if you wanted to go way out, just to kind of see what you could do, just in your mind, you say, okay, let's go March 2026. So not quite a year out. And you want to sell that same 56, it's $10.50, bro. $10.50. So does anybody want to do the math? Here, one of somebody at home, $10.50 divided by $51.53. You could do a buy right where you buy it and immediately write a contract against it. So let's do some math. I bet you get a number that's very close to 20%. Very close. Immediately. Problem is, but not the problem. That's cool. That sounds cool. You want to really get wonky, go out, get out to January 2027. See what that same $56 contract is. $15.80. So again, it just depends on how long you're willing to have your stuff gummed up. I like the weeklies because you're like, oh man, I could get all that money right now this second. Yes, you could, except that when you go back to the current ones, let's go 1 week out. Let me. This is monthly. Oh, it doesn't have the other ones. I'd have to go back. I'd have to get it's the April 25th. Usually you can just, whatever, it doesn't matter. It doesn't have I'd have to get the weekly somewhere else. You anyway, the point is, if you go week by week, then the differences are that you have the potential to put away kind of you have a better feel for the market, and you can probably put away 50, 60, 80, 90 cents every week. And so you think, okay, I could wait a quarter and I could put $3 in my pocket, or I have 12 weeks where I can hit 50 to 70 to 90 cents a week. And that's a lot more than the $3. Also, again, when you're doing the weeklies, you're closer to the pulse. You're closer to the price. So you understand the asset a little bit more. Does that make sense? Yeah. Do I do this with other assets? I used to, but I don't own other assets now. I'm only in the crypto space or peripherally in the option space just for IBIT. Yeah, so that's that. Because I like the volatility. And remember, or don't remember, keep in mind that a lot of assets don't have this volatility, the kind of volatility that Bitcoin has, and so their premiums are not going to be as high. Why? Because in addition to time, the more volatile an asset is, means the more likely all sorts of prices are to be achieved, high and low. So big volatility equals high premiums. Does that make sense? Far out in time equals high premium because a lot of time premium. So if you have a lot of volatility, you can sell shorter time periods, which keeps you closer to the pulse of these assets. And you also don't really need to do this for a bunch of different assets. But if you have assets, you absolutely should be. If I had 20 different stocks that I owned or something, and I could sell options, I would sell out of the money calls on every single thing that I owned. I have a buddy, he owned a fund. They got purchased by Chase. He got bought out, but he owned a fund in Texas. He made his entire career, again, before he got bought out and got rich, he made his entire career selling out of the money puts. He's like, I spent my whole career in cash. He's like, you sell puts against stuff that you don't mind owning at a price you don't mind owning it, and you do it as fast as you can all the time, and you book profit and call it a career. And if the pile of money is big enough, there you go. I can tell you this, I transferred money from one of my other accounts back to my bank account, which later today will be wired over to E-Trade to double my current amount of options cash, just a straight up double. Because why not? So yeah, so there's that. If that gives you any idea, what I had been grappling with for a long time was, I'm stuck in this weird spot, which is not a bad spot. I have Bitcoin, and it's sitting there and it's not performing, and I wanted the Bitcoin to do something, like poke it with a stick, and I kept waiting for someone to either make Deribit legal to U.S. customers or to open spot Bitcoin trading. Spot Bitcoin options trading like Ledger X used to have, and then they've gone bankrupt. They don't exist. They're a bunch of bullshit. So they're dead. So as an American, we don't have an option for that, and Deribit won't accept the Palau ID, unfortunately. So either you have an entity offshore that gets that achieved through lawyers and crap, which I don't have, or you don't get to participate in Deribit. Therefore, I'm left with having to participate indirectly with IBIT, which I'm okay with. That's fine, and it's probably good. I'm probably investing against a dumber class of investor. The kind of people that would be trading IBIT are probably statistically not super smart. They're probably not early adopters, so that's good. There's an IQ mismatch. An intellectual arbitrage, we'll call it. So I guess that's cool. But anyway, so I originally put extra money that I had that I thought I was gonna have to pay on taxes. I put that extra money in a few weeks ago after the tax man was like gone, and that's been sitting over there. And I've decided I want to double that, and I'm gonna double the double here in a few weeks, when we have a couple of cars that are crashed and that State Farm is covering them. It's like $1 million worth of cars between me and Eric. So I'm going to take a chunk of that, and I'm going to push that in as well. I'm going to get that account up. I want to try to get that account up to like $1 million or a little bit over $1 million, so that I can see along this progression how close we can track to the 60-month curve. I want this 60-month curve. I want it so bad. Anyway, there we go. All right. Okay, let's talk about some other things before we call it a day. One, compounding interest. God, it gives me a financial wood. Ever had financial wood? Okay, let's talk about Douche Bank. Sorry, not Douche Bank. Did I spell that wrong? Deutsche Bank. and Standard Chartered are eyeing an expansion into the U.S. crypto market. Deutsche Bank, Standard Chartered are accelerating their U.S. crypto ambitions as regulatory winds shift under the Trump administration. After years of regulatory friction, Deutsche Bank and Standard Chartered are now exploring options to expand their crypto operations into the United States. According to a new report by the Wall Street Journal, the timing of this move coincides with a significant policy shift under President Donald Trump's newly renewed administration. The Wall Street Journal put, President Trump's pledge to make America a Bitcoin superpower has set the stage for crypto to become more intertwined within the banking system. And we talked about yesterday, Charles Schwab is coming into Bitcoin, spot Bitcoin products by April 2026. We'll see if they wait that long. While much of the traditional financial system has distanced itself from crypto following high-profile disasters like FTX, Three Arrows Capital, Luna, Silvergate Signature, the climate in 2025 is proving to be notably different. You know, it's funny. If the Silvergate and Signature Bank issues had happened now, and like SVB, those banks wouldn't go under. They'd be protected. You can thank Elizabeth Warren for effing all those investors and effing everybody that had those accounts. Thanks, Elizabeth. Good job. Because she basically threatened those banks into insolvency. And she threatened lenders that would have lent to them to keep them out of their weird situation. She's a crook, man. Anyway, the Trump administration has already overhauled the U.S. Securities and Exchange Commission's approach to crypto regulation and approved the formation of a digital asset reserve, the strategic Bitcoin reserve. As a result, legacy banks are now racing to position themselves for leadership in this newly promising terrain, which, yeah, we knew they would get put into this market, and that's what's happened. They were short, they got put. Deutsche Bank deepens global crypto ties and advances their entry into the U.S. Their interest in crypto is not new, but these kind of recent actions and like public actions significantly intensify Deutsche Bank's ambitions to be in the digital asset market. So essentially, they partner with Bison app to strengthen their security, multi-banking strategy. They're probably looking at what custody would mean for them. So they partnered the Bison app. I looked at that thing. It looks stupid. But anyway, they partnered with Deutsche Bank in late January. Mid to late January. So they're now a banking partner, and so it'll help custody and service and things like that. So Deutsche Bank is now responsible for safeguarding the euro balances of the Bison users. So now they're all kind of like working together. The move was part of Bison's multi-banking strategy and did not replace Solaris as its long-term partner. Previously, Deutsche Bank expanded its services to Asia by forming a strategic alliance with the other scummiest company in the world, Crypto.com. You know, Crypto.scam. You know, the company that burnt 70 billion tokens and then unburnt them a few weeks ago. So Deutsche Bank, which is the douchiest, one of the scummiest banks outside of HSBC. Who are the big offenders? I mean, you know, the same dudes that work with terrorists and drug cartels and all this kind of shit. The same crap. But anyway, Deutsche Bank partnered with Crypto.scam. What a great pairing. I'm going to just go out on a limb here and say, if in the future you find yourself doing business with Deutsche Bank, don't. If you find yourself doing business with Crypto.com, also don't. If you have an account, shut it down. That whole fucking group is a bunch of crooks. All of them. All right. Anyway, Standard Chartered, which isn't as bad. I say as bad. They're bad. They ain't as bad. Standard Chartered launched institutional-grade crypto solutions and is preparing for U.S. growth. So while Deutsche Bank focused on strategic partnerships with scummy little companies that no one knows about, Standard Chartered is taking a slightly different path, emphasizing infrastructure development and regulatory alignment. In April, Standard Chartered unveiled a digital collateral mirroring program in partnership with OKX, which OKX is Be careful. Be careful with OKX. And Franklin Templeton. So anyway, they launched the Crypto Collateral Project. And essentially the initiative allows institutional clients to use tokenized money, basically tokenized money market funds and cryptocurrency as collateral for trades, all under the regulatory oversight of Dubai's BARA, which is their regulatory authority. Anyway, the program is designed to boost capital efficiency and mitigate counterparty risk by holding the collateral off of an exchange, which is a significant step forward in integrating digital assets into more institutional workflows. Standard Chartered acted as the regulated custodian in the setup, good middleman. So think of like when JP Morgan sits in the middle of a two-party, like a three-party repo, like a repo transaction where they're the agent in the middle. They're like, you give me your shit, you give me your shit, here's your stuff, go. Okay, everybody go. So that's what Standard Chartered did. They're like a middleman in a crypto base, in like a crypto repo transaction. Anyway, and so as a custodian, they were leveraging their presence in the Dubai International Financial Center. Cool. In addition to collateral services, Standard Chartered has entered the stablecoin race in its Hong Kong branch, SCBHK, Silicon Chartered Bank Hong Kong, recently partnered with Animoca, which is a sketchy company, Animoca Brands and HKT to launch a Hong Kong dollar-based stablecoin. This will, in my opinion, absolutely shit the bed. Animoca is sketch. They're one of those big NFT. Look, they fancy themselves as an incubator in crypto. They are a bunch of scumbags. Now, maybe there's some decent people that work there, but I've been on a few calls with people from Animoca. They're a bunch of douchebags. Not douchebags, scumbags. So that's gonna be a thumbs down for me, bro. But anyway, the point is, big banks are coming. They're coming, and it's not just gonna be them. Both those banks and other banks are trying to seize the moment to start building their capabilities, deepen crypto partnerships, prepare for a more formal row in the American crypto economy. But if they're attached to Animoca, Crypto.com, HSBC, FTX, Standard Chartered, like, stay away from them. Just, it's cool that they're coming, but that doesn't make them any less scammy, I guess. Cool? All right. And then finally, the ECB is on high alert. Could the U.S. crypto wave infect global finance? The ECB. A day late and a euro short. The European Central Bank warns that growing support from the United States for cryptocurrencies, especially dollar-backed stablecoins, could trigger capital outflows from Europe. Okay. It calls for a review of the MiCA regulatory framework just months after its implementation. Meanwhile, the European Commission sees these concerns as unnecessary, sparking an internal debate over what the future of financial sovereignty in the region might look like. None of these dickbags have any clue what's going on. Anyway, the ECB expressed concern, the European Central Bank, over the increasing regulatory momentum the United States is giving the crypto sector, particularly with legislative projects like the Stable Act and the Genius Act. These initiatives aim to position the U.S. as a global leader in the stablecoin market. Cool. Well, Europe rippled all over crypto for a decade and a half. What do they expect? You're late to the party. This is the same European Union, the ECB, that's dominated by the Germans, who sold every goddamn Bitcoin they had at less than half the current price, so they could show us. They'll show us, you dumb crypto people. We'll show you. We'll sell a fuck truck of Bitcoin at $40,000. Joke's on you. No, it isn't. The joke is not on us, dummies. Bunch of freaking sauerkrauts. Anyway, I bet those politicians, I wonder what, when someone says, hey, you guys threw away billions of dollars, they're just like, shut up. I don't know how Germans get mad. I don't know where they would go. Anyway, The warning from the ECB comes just months after they implemented the MiCA Act, Markets in Crypto Assets Regulation, initially celebrated as a pioneering framework for crypto regulation across the continent. However, the ECB has now officially requested a review of key aspects of the thing that they just passed, arguing against the thing that just passed, that its current restrictions may be insufficient to counter the American surge and could backfire by harming European competitiveness. Hey, this just in. Europe's not competitive at much of anything. They make cool sports cars. They export a lot of very fit supermodels. And that's really about it. They don't have much else. I mean, I guess what? Virgin olive oil or something and wine. Okay. But they don't do anything anyway. That's why it's a dumpster fire and they're in the middle of an awful recession. The European Commission, on the other hand, has responded that it sees no strong reason to revise MiCA so soon. They just implemented it. International sources say several member states consider it premature to make changes to a thing that's only been in effect less than 3 months without fully assessing the real impact of U.S. laws, which that is competent governance. Like, we just did this, man. It took us years. We just did it. Now you want to redo it again? We just did it. This divergence in opinion between the ECB and the Commission reveals a lack of consensus on Europe's approach to cryptocurrencies and a lack of education, and raises doubts about its ability to respond to geopolitical shifts. Well, this just in. Europe is terrible at responding to geopolitical shifts, and they've always been terrible. That's why their economies are terrible. Currently, the global stablecoin market is valued at $234 billion, led by giants like Tether, which is a Ponzi scheme, which has openly criticized MiCA's requirements. Why? Because MiCA requires there to be auditing of reserves. The rule mandates that at least 60% of reserves be held in European banks. It has led USDT to be delisted for platforms such as Coinbase and Kraken in Europe, negatively affecting ecosystem liquidity. No, negatively affecting the fucking Ponzi scheme run by Tether. That's these guys, man. That's a whole other thing. You know what? I'm not even going to go down that road. I already dropped some F-bombs today, and I didn't plan on it. So there you go. There's 2 F-bombs. Anyway, great. ECB on high alert. Who cares? Standard Chartered and Douche Bank. Also, who cares? Well, the long end of it is it's nice that these bigger banks are being put into crypto. That's the main takeaway, and that's great. So good for us. Yay. All right. Let's call it a day. We'll get back to it. We'll get back to it tomorrow. We'll do some more of this fun stuff tomorrow. I have some Libera updates, but we'll do that tomorrow. But anyway, I posted a video in the chat. It's really cool. Go look at the video that shows what they do, their apps, and all this kind of cool stuff. But that's in the Telegram chat. Okay. So stay in school. Don't do drugs. Don't do anything my poor and solid drunk so I'm going to mess grandmother or Brandon wouldn't do. Yeah. And on that note, I bid you a fond adieu. Let's go over here to this cool thing. Let's get on up. Let's get on out.